Time for our weekly market monitor, who has three different types of dividend-paying growth stocks that he feels should protect your portfolio should equities sell off. Last time he was with us, by the way, last October, he recommended these three companies: O'Reilly Automotive, which is up 14% since then; IDEX Laboratories, which is up 27%; and MasterCard, which is 39% higher. Back with us tonight, Doug Butler. He's portfolio manager at Rockland Trust. Doug, good to see you again. Thanks for joining us tonight.
Great. Thank you for having me.
So we're talking dividend stocks, but we're starting with 3M, which today became something of a controversial company because they revealed an internal investigation into potential violations of U.S. foreign corrupt trade practices. Here's their statement that they issued to explain what this investigation is all about. They said through this internal process, they discovered certain travel activities and related funding and record-keeping issues, raising concerns arising from marketing efforts by certain business groups based in China. We just felt the need to disclose all of that. You still like the company, or does this give you pause at this point?
I think anytime you're seeing one of these foreign corrupt trading, which largely tends to be bribes paid normally by people who are not necessarily super high up, it always gives you a bit of a pause. But I think 3M in particular is a company that has weathered so many storms. They've paid dividends for 100 years. They've grown their dividends for 60 years straight. They're a global player, and there's always going to be some headline risk around names that do a lot of business in China or in parts of the world where the corrupt services may come into play. But I think we are still confident in the long-term prospects and the prospects of 3M. Again, it's damaging if it ends up being meaningful, but we're comfortable with the name.
Very good.
Let's go to your other pick, Cerner, the leading company in digital health records.
Yeah, I mean, I think everybody knows when you go to the doctor now, you see an iPad in their hands normally, and you see it at every hospital. Almost every hospital in America now has electronic health records, or every major acute hospital. And frankly, 87% of physicians' offices now use electronic health records. So it's really becoming very prevalent. And we like them because they're the sort of stock that's a dividend initiator. They just decided to pay a dividend for the first time. And again, this is sort of getting in on the bottom floor of the massive dividends we project a client earning for years to come.
Quickly, if we can, on Fastenal, the industrial supply company, they have a dividend yield of 2.7%. Suffered a little bit the last couple of months. What do you like about them?
Well, I think they suffered. The news came out in terms of the GDP numbers this past quarter, and business confidence suffered this time. And we think business confidence will recover. We still believe that the trade war will not be, a full-scale, full-blown, no-holds-barred trade war. We still think there's room for negotiation, and we just think it'll take a little while. It's going to probably take another 6 months. But we still see them as a company that has many growth opportunities ahead of it, and especially in building they're a different type of connectivity than we're used to talking about.
Doug Butler with Rockland Trust. Again, thanks for joining us tonight.
Thank you.